Guys, come on, Carlsberg. Who hasn't heard of it? Sorry, my Muslim friends might not be very relevant to you this video. However, did you know that Carlsberg Malaysia share price has been flat pretty much over the last 1 year? So the question is, should you make the investment? MJ from the FIRL Guys here. Welcome back to our channel, the best place for long-term stock investors. Today, you're going to learn about Carlsberg's history, what it does, the financials, and definitely the risk and rewards associated with the company if you choose to invest in it. And as usual, if you enjoyed the video, remember to give it the like so you can help us with the algorithm. And if you're not subscribed already, what are you doing? Please subscribe. And of course, hit the bell so that you know when fresh videos are out. Alright guys, let's take a look at what Carlsberg Malaysia does. Basically, they produce, package, market and distribute malt beverages like beer and stout. What kind of brands do they have? So the most famous one is Carlsberg Danish Pilsner, you know, that green bottle that we always see. Then we have Kronenbourg 1664 Blanc, which is French, followed by Japan's Asahi, Somersby, Corners Porter Stout, Brooklyn Brewery of the United States, Corona Extra from Mexico, Royal Stout, Skol, Jolly Shandy, and Nutrimalt. Most of their operations are related to Malaysia and Singapore, but they also have a small stake in a brewery in Sri Lanka. The company also does exports and intercompany sales to countries like Taiwan, Hong Kong, Cambodia, Laos, Thailand, Sri Lanka, Timor-Leste, Papua New Guinea, the Maldives, and even Guam. However, for your information, 70% of the company's sales comes from home, Malaysia, and 27.5% of it comes from Singapore. Now, as always, let's take a look at the company's history. Carlsberg Brewery Malaysia was incorporated in December of 1969. Then in January 1972, it got listed. In 1999, the company spent 135 million ringgit on a 3-phase expansion plan, which will last about 3 years. This new expansion plan will include 3 new stainless steel beer tanks, each having a capacity of 2,525 hectoliters. They will also have a shandy plant, which has 1,200 hectoliters per run, doubling from their previous 600 hectoliters. Then finally, in November 2001, the brew house made its first beer. Then it is in 2003 where we get introduced to the now famous Carlsberg Green Label bottle. Come September 2004, Carlsberg Malaysia introduced a new beer brand called Skol. Now, for Carlsberg Malaysia, 2008 is a pretty important year. What they did was to buy a 70% stake in Luan Feng F&B Sdn Berhad. Why did they do this? Because they wanted to expand their brand portfolio to include brands like Stella Artois, Hoegaarden, Budweiser, Foster's, and Beck's. Now, if you think 2008 was big for the company, 2009 is even bigger. Carlsberg Malaysia bought 100% stake in Carlsberg Singapore for 370 million ringgit. In 2010, the company added to its beer brand portfolio. Leading the way is Kronenbourg 1664 Blanc, which is the #1 premium beer in France, followed by Asahi, the #1 beer in Japan, and Erdinger, the #1 wheat beer from Germany. In 2015, the company sold its 70% stake in Luan Heng Sdn Berhad to Capriwood Sdn Berhad for a total payment of 19.5 million ringgit. Now, If you're aware and if you're detailed, you notice that they only held Luen Heng for 7 years, since 2008. And you might be wondering why they did it. Well, the reason that the management gave was because they wanted to focus on the core business and to maximize their investments. In other words, they didn't quite feel that they were efficient. However, not everything has changed. They're still going to import and sell beer from Luen Heng so that they can remain competitive. Lastly, in 2018, the company introduced Brooklyn Lager and East IPA to Malaysians. Now let's take a look at the management, more specifically the managing director. Stefano Clini of Italy is currently the managing director for Carlsberg, Ciao, at age 53 years young. He has a degree in business and economics from, I'm going to try my best to pronounce this, Libera Università Internazionale degli Studi Sociali Guido Carli, or LUISS for short. From 1996 to 2000, he was the managing director for Procter & Gamble in the laundry and detergent section. Then from 2000 to 2005, he was the managing director for the fabric care division in Southern Europe for Procter & Gamble. Also, in 2002 to 2005, he was the managing director of Procter & Gamble, Turkey. Now, Mr. Clini was also the president of Heinz Italy, you know the ketchup, from 2005 to 2013. Then from 2013 to 2016, he was the CEO of British American Tobacco Malaysia. Then, in April 2017, he became Carlsbg Vietnam's managing director or CEO. Finally, it is in October 2019 that he becomes the CEO of Carlsberg Malaysia. Now, time for the financial numbers. In 1999, the company had a sales of 842 million ringgit. 20 years later, in 2019, that number was 2.26 billion ringgit. In the second quarter of 2020, the company's revenue was down 40.2% to 287 million ringgit, mostly because of the COVID lockdown. Now let's take a look at the operating profit. In 1999, that number for Carlsberg was 137 million ringgit. 20 years later, that number became 366 million ringgit. The second quarter of 2020 saw pretty bad results. Operating profit was at 13.5 million ringgit. Again, due to the COVID lockdown, that's a big reason, but also why it was down 83.7% was because of a one-off charge of the bills of customs of demand amounting to 6.4 million ringgit. Now, let's look at the balance sheet. In 1999, the company had a net cash of 210.6 million ringgit. However, in the second quarter of 2020, instead, they had a net debt of 52.6 million ringgit. Now, you might think that this is not so good, this is negative, right? But in my view, actually, Carlsberg has such a great brand that generates so much cash flow, that isn't really an issue. And you see why when I talk about operating cash flow in the next segment. By the way, guys, I really want to know, when you invest in a company, right? Are you worried that the company has a net debt instead of a net cash? Tell me in the comment section below. Now, as you might already know, let's look at my favorite number when it comes to accounting numbers or financial numbers, called the operating cash flow. Now, in 1999, the company generated 70.6 million in operating cash flow. Fast forward 20 years, that number becomes 379 million ringgit. However, again, thanks to COVID, the second quarter 2020 numbers for the operating cash flow stood at 67 million, down half compared to the previous year. Why? Again, because of COVID, but also because of increased receivables and decreased payables. Now, if you plan on buying it, right? If you plan on buying the company, what are some of the risks and rewards? Now, the first good thing about the company is that it's very familiar, it's famous. All of us Malaysians know about it. When you look at the brand, you don't really think twice about choosing some other brand. The second thing is that Carlsberg is part of what we call a beer duopoly, meaning there's really only two players in this market, the other being Heineken. Now, why is this relevant? It's relevant because let's say if Carlsberg eventually wants to expand some more, they know because they are so secure in terms of their marketing that they'll be able to scale with ease and a lot of predictability. Third, the company also has a very simple business model. We all understand. They make beer, we buy the beer. And going back to the point about predictability, this means that simple plus predictable means a lot of cash generation, which leads to my fourth point, which is that because they generate so much cash, they're able to pay out a lot of dividends to you as a shareholder. Now, how about the risks? I have a couple. The first is this thing called excise duty. If you don't know what it is, it's basically the government slapping a very hefty tax, in Carlsberg's case, on every beer that you buy. For your information, Malaysia has the third highest beer or alcohol excise tax, and the first two is Norway and Singapore. Now, this causes the second risk, which is high contraband. Now, what is a contraband? Basically, because of the excise duty or tax, these beers are pretty expensive. So, there'll be very sneaky and smart people around Malaysia that will try to sell you these beers for lower, illegally. And that is what contraband is. Hope you enjoyed the video. Hope you're a little smarter about Carlsberg Malaysia now. Remember to like us on social media, and while you're at it, why not check out some of our other videos.